Bitcoin is down over 30% from all-time highs, even though the US government just signed a strategic Bitcoin reserve into law. But was this all part of the plan? As someone who's been holding Bitcoin since 2013, under $100 of Bitcoin, I'm going to share with you my 3 tips on how not to get shaken out by fear and high time preference. Because trust me, Michael Saylor, Larry Fink, and yes, even Donald Trump would love for you to sell them your Bitcoin. Let's dive into it. So stock market is incredibly volatile right now. It's going down, it's going up, and recently is crashing. Actually looking a lot like how all the 2020 madness was playing about during the big early year crash. And there's this very interesting theory that I want to start with from Mr. Anthony Pomp. Shout out Pomp, and about planned demolition that might explain why this is happening.
We got $7 trillion of debt. We need to pay it back in the next 6 months. That's a big bill, baby. If we don't pay it back, we'll have to refinance. And the Trump administration, they do not want to refinance that debt if rates are at 4% or higher.
It's actually crazy to me that we've got this big moving system where the US government owes debt. They kind of owe debt to a sub party. The interest rates affect them. You know how you and I, especially up in Canada, our interest rates vary on a 5-year basis for most mortgages. And so we got to think in 5-year time horizons. You know, when are you going to refinance a couple $100,000 of debt that you have on your house? Well, the US government has a bit of a pickle here where they're trying to refinance $7 trillion. So yeah, I mean, if the interest rates can go down a couple percent, that's probably meaningfully different for the taxpayer and ultimately for the country.
So what do we got to do? The 10-year yield, we got to get that thing down. At one point, it was at 4.8% this year, but we got to get it lower. And so how do you get it to come down? Well, markets, they need to be scared. They need to show a little weakness in growth. People got to believe that Doge is actually working and interest rates will slowly start to come down. And the way to do that is you create that fear and that uncertainty. You do it through things like tariffs. And so as you put on tariffs, you can see the slowdown in growth in the short term. You can get the bond market to start buying bonds as soon as possible because they're scared to touch stocks.
That's actually crazy. Again, being in Canada, I'm seeing right now, everyone's all like delusionally mad at the USA buying only Canadian products, even though most of our products are still made or manufactured or owned by US companies. But either way, and Trump is just loving that probably. He's seeing, you know, he's like, yes, please slow down manufacturing. We need things to get a little bit worse so that the interest rates can come down to encourage big spending to refinance this debt. I actually don't mind this theory.
And then, of course, that gives the Fed, the big bad Fed, the authority to bring lower rates down, which continues to bring the yield down as well.
So all that to say, I'm not really going to comment on the legitimacy of this theory. The math checks out. From a first principles perspective, I could definitely see the government trying to manipulate the money, manipulate the interest in order to get a better deal. And ultimately, that comes at the expense of you and I. This is a problem. This is really only a problem because we have this ominous third party, this unnatural force entered into our free market of money. With a free and open monetary policy, you could actually get away from all this garbage because you wouldn't have someone arbitrarily setting rates. You wouldn't have someone trying to control inflation. We wouldn't really be lied to right now that you need inflation in order to have a stable and steady economy. Because we've had inflation for almost 100 years now. And last time I checked, the economy is it's the farthest it's ever been from stable and working. And so you might ask, hey, Adam, isn't Bitcoin supposed to be some hedge against inflation? I thought we were promised, you know, nothing but peaches and rainbows. And my take on this actually is borrowed from Jack Mallers. I think that Bitcoin is acting exactly as it should be right now. Bitcoin is meant to be the purest form of economic driver. Bitcoin is a consequence to the economy, not the lifeblood of the economy. You and I are the lifeblood of the economy. And so when you have someone some kind of form of money so deeply connected to the economy and the economy is turbulent, you should expect that asset to also be turbulent. What I think people misunderstand, or at least what the fiat maximalists and the globalists and the communists and all the people that are maybe anti-freedom and anti-Bitcoin, what I think that they've kind of told us or they've sold us is that the way that money is manipulated is for their benefit. But I actually believe that when we manipulate money, we might solve or push some short-term pain down the road. But ultimately, that pain comes. Much like you can blow hot air into a balloon, but eventually it has to, and it's going to pop. And when you manipulate a free and open market, the pain just goes into the future. That is a high time preference behavior. Bitcoin is very, very, very good money for value that you want to launch into the future. Now, future, maybe 1 year, maybe 4 years, maybe 10 years. How about we say 50 years if your time preference is low enough? But at the end of the day, you want to put future value into Bitcoin so it can maintain that value. You do not want to put current value or value that you need to use right now into Bitcoin. The things that you spend Bitcoin on, when you're no longer spending melting ice cubes, it's very, very important that the thing that you are buying is very worth it. And Bitcoin kind of just levels the playing field. I think I heard Dave Ramsey say before that people spend more money when they're using a credit card than their debit card because they're spending someone else's money. The psychological difference, call it placebo, call it whatever you want. There is a psychological difference to spending someone else's money. And Bitcoin takes that analogy one step further. When you spend dollars, you have a melting ice cube in your hand. You're happy to get rid of it and get something else in return. Maybe it's dopamine. Maybe it's some delicious food, which is probably going to give you dopamine. Maybe it's some kind of entertainment. Basically, we spend melting ice cubes for dopamine. And when you spend or when you save Bitcoin or when you spend Bitcoin rather, you're actually giving up future value that you know will be worth more. We've got on Tom's video here. I see we're in recession is good, actually, news cycle. Another commenter said the 4 stages of mainstream journalism.
That's not true, and it's definitely not really happening. Yeah, it's happening, but it's not a big deal. That thing that's happening is actually a good thing, and here's why. People freaking out about the thing that's happening are the real problem here.
So in my experience, it's been over 10, almost 11, 12 years now. I've been personally through 3, this will be my 4th kind of cycle. Basically, Bitcoin starts at section 1 of the cycle, goes through a period, hits an all-time high, and then boom, big crash. And generally, we believe that it's surrounding around the mining and the halving. Personally, I think that this could be the cycle that kind of breaks that crystal ball. And we had a period of crystal ball where it's pretty uncanny. 2013, we had just seen this massive rise up from Mt. Gox and then boom, crash. Then we had a big bear market until 2017 when the ICOs are coming about. We had this massive rise up and then crash 4 years later. And then we had this big bear market. And then 2020, you got the NFTs and all the scams and FTX, this massive rise up and then a crash in 2021, 4 years later. And so now here we are in 2025, 4 years later, and it's like, oh, hey, we're getting ready for a big run up. And I personally would subscribe to that for this current period. We've got so much bullish stuff happening with the SBR. We've got the ATF inflows. We've got Saylor buying like an absolute savage and different countries adopting a Bitcoin standard. Nothing but positive news. You might be thinking, okay, how do I take advantage of that? How am I going to benefit my future family? How am I going to benefit myself? Should I trade in order to stack sats? Should I get into scams and altcoins in order to stack sats, NFTs? My advice to you, as someone who has tried these things, unless you have a crystal ball, unless you get lucky and time the market, you will have less Bitcoin than you started with if you try to employ these strategies. Go to the casino. We need to reframe our mind around what Bitcoin is and what everything else is, because everything else is gambling. And so you might think, okay, great, I'll stay in Bitcoin, but I'm going to leverage my Bitcoin. I'm going to put 50% LTV, 30% LTV, whatever it might be. I'm going to put a bunch of Bitcoin into a lending platform, take out more money, and buy more Bitcoin. That's pretty good. That's probably the safest of the dumb strategies, but it's still dumb. And the reason for that is because Bitcoin is going to be volatile. And I think that we should continue to expect Bitcoin to be volatile. And in these lending platforms, when you have Bitcoin pledged against a loan, if at any point in time, even for a split second, your lending balance goes below the certain threshold, you're done. Coins are automatically liquidated. This is how these platforms are built. If you think Bitcoin is not going to be volatile, you should do this. But also, why would you do this if you think that Bitcoin is not going to be volatile? There's no point. So I think, again, from a first principle perspective, these things are misaligned incentives. The only reason that you should feel safe, borrowing against or taking leverage on your Bitcoin is because you do not think the volatility is going to be extreme. But if the volatility is going to be extreme, why are you giving up self-custody? Why are you paying interest? Why are you doing all this stuff just to stack more Bitcoin when it's not going to be volatile? In reality, what you should be doing is working hard, spending less than you earn, and stacking sats with the excess. This is the low time preference Bitcoiner way to ensure that the value you're making today is going to be launched into the future. And all that actually brings me to my first tip. Very, very clearly, do not degen. I think that when we degen, when we take leverage, when we gamble on other stuff, when we entertain this uncertain economic environment, we have a massive risk. And that risk, more often than not, is going to leave you with less sats than you started with. So tip number one from Adam, if you want to not get shaken out by the fear and the greed, is do not degen. Now you might say, well, how do I do that, right? What's the problem? We've talked about it already, but the second tip, very, very clearly, is just spend less than you earn. You want to be the person who everyone thinks is poor. Don't let other people get in your head and try to force you down this really brutal fiat maximalist environment and society that we have right now. The greatest freedom that I have gotten, because I've fallen into that trap. I have bought the cars, I have bought the house, I have sold the coins for the stupid things. And, when you really think about it, it's to try to impress somebody else or some other group of faceless people. It's for the Instagram story. It's for the YouTube video. It's so that, your friend, your family, your parents, your girlfriend, whoever are going to think you're successful. None of that matters. What matters is that you and your family are protecting value and launching it into the future. And all that brings me to the third point, which kind of actually sums the whole thing up, but really, really focus on lowering your time preference. Always think, this decision today, how does it affect my future? And if the answer is it doesn't, then think differently. What action could I take today that positively affects my future? Forget saving for next year, or, if you're into the corporate cycle, saving for next quarter. And what if we started looking at next decade? What if we started looking at next generation, or 2 generations, or 3 generations? And here, for a special bonus tip, I think that at all opportunities, lower your time preference enough so that you can smash buy, so that when the markets are fearful, you can be greedy. But again, only do it with money that you want to launch into the future. If you got $1,000 lying around and you are confident that you do not want or need that $1,000 for the next 12 months, pick your time frame, whatever it might be, and you want that to be the benefit of your great-great-grandchildren, the only place to keep that value is in Bitcoin. And so on that note, I want to hit you with one more example of embracing the pain. So credit to Wrecked Plebs Telegram.
Just shut up and let me enjoy this pain.
Welcome to the pain zone. It's where we live.
Let's go.
When I'm hurt, I love it. I love that feeling because it's real.
You need to love pain.
Be the guy who embraces the ugly, the miserable. Be the guy who embraces hard work, the grind. Don't be afraid of being hurt. Don't be afraid of sacrificing some blood.
Everything else, happiness could be fake, crying could be fake, but pain? Shit. That's real.
However, mentally, physically, love it. You need to love it. If not, stay where you are.
Yeah, I think that truer words going to be spoken. And, I wish that we would have had some real chart movement here, because minus 7% in Bitcoin is not pain. We're talking like, how about minus 87% is pain? I have watched Bitcoin fall from $1,200 to $300, actually $243, because that was I'll never forget this moment. I was sitting in a cafe with a friend in Edmonton, and we were talking about Bitcoin, talking about the craziness of that bull market and now what was happening. Something that he said to me, maybe this is it. Maybe Bitcoin is just only worth $243. Of course, a couple of years later, we were looking at staring $20,000 Canadian in the face. So I urge you, embrace the pain. Do not get shaken up by the market. And also let me know, what do you do? How do you embrace the pain? Have you sold Bitcoin out of fear, out of greed? Have you been wrecked in leverage? Let me know in the comments down below. Let's practice this low time preference together. Let's understand what it means to capture value, lock it in a monetary protocol, and launch it into the future. Of course, all that to say, stay sovereign.